Hi everybody, it's Peter Schiff. This is Friday the 13th of May 2011. Well, the correction that began the prior week in commodities, in precious metals, continued this week. Also, stocks around the world sold off, not just here in the U.S. And apart from the technical aspect of this, certainly there's a lot of technical components to the correction. And you have a lot of rhetoric out there, politicians really bashing on speculators, and you actually have some of the exchanges ratcheting up the margin requirements, making it more difficult for people to maintain these positions. So there are a lot of other things at work, but I do believe that there is a fundamental reassessment going on in the minds of a lot of people who control a lot of money. What I think is happening is that many people are starting to take a look at the prospects for the U.S. economy. And I think based on the evidence, both in the economy in general and the housing market in particular, I think a lot of people are coming to the correct conclusion that the U.S. recovery is fading and U.S. economic growth will not be as robust as people had forecast. And as a result of that ratcheting down of U.S. growth, I think people are then making the extrapolation that the global economy will not be as strong as had been thought, especially with global central banks raising interest rates. That might be reining in some of the growth. Also, I think you have a lot of people coming to the conclusion that quantitative easing is going to come to an end in the summer, like the Fed claims. And of course, quantitative easing is a big factor, whether Ben Bernanke wants to admit it or not, in providing the impetus for the rise in commodity prices and weakness in the dollar. After all, quantitative easing, by definition, is debasement of the U.S. dollar. It means printing more money, driving down the value of the dollar, which obviously drives up the dollar price of commodities, and which causes other central banks, particularly those that are trying to maintain pegged relationships with the dollar, to print even more money there. So you get global monetary debasement, which all is positive for precious metals and commodities in general. So if quantitative easing is going to come to an end, it's like you're taking away one of the props behind the market. And of course, if quantitative easing is helping the U.S. economy, if you take it away, then it's obviously going to be negative for the U.S. economy. I think a lot of people believe that quantitative easing is certainly a crutch that has helped the economy limp along. But I think they believe that if you remove that crutch, that we're still going to be able to make forward progress, maybe at a slower pace. See, I don't think people understand that it's not really a crutch. It's more the equivalent of life support. The economy is on life support artificially based on quantitative easing. And if it comes to an end, it's the equivalent of the Federal Reserve pulling the plug. The economy can't survive without the quantitative easing because it's phony. But we don't have real economic growth. And that is where I'm parting from this conventional wisdom. I said I agree that there is going to be a slowdown, but it's precisely because I believe the U.S. economy is going to slow down. In fact, not just slow down, but collapse. That's why I'm so bullish on commodities. I am not buying commodities or precious metals because I think U.S. economic growth and global growth are going to mean that commodity prices are going to rise. I think it's the opposite. I think because the U.S. economy is so fundamentally weak that QE2 is not going to come to an end, that it's going to continue, and it's precisely because it's going to continue that we want to keep buying precious metals and commodities, because that means more money printing. And for a lot of people who think that, well, if the U.S. economy slows down, then the whole economy is going to slow down as well. The world economy does not need American consumption to continue to produce. Products are going to get produced whether we consume them or not. And in fact, if the U.S. dollar is falling, like I believe it will, all that's going to change is who consumes what gets produced. As the dollar loses value and Americans become poorer, Americans naturally consume less. But as the dollar loses value, it's losing value relative to other currencies. And so people who earn those other currencies, who have those currencies in savings, now they're richer. And because they're richer, they simply buy the products that Americans are no longer able to afford. The global economy continues, except we don't benefit from it to the extent that we have been. Other people who have been living beneath their means suddenly benefit. But if the assessment is correct that the U.S. economy is slowing down, it is not bearish for commodities. It is not bearish for precious metals. It is, in fact, bullish. But I think people are coming to the correct conclusion that the economy is weakening. It's not going to be as weak as they think, but they are selling commodities as a result. They are also, I believe, selling stocks in emerging markets around the world because they believe that if the economy slows down, these types of assets will get hurt more. I think that's probably why the U.S. dollar is rising, because if you have a lot of U.S. funds that are liquidating overseas positions, they are also liquidating those currencies and buying U.S. dollars when they bring the money home. And I think it's also part of this whole perceived risk on, risk off. I think the definition of what's risky and what's not risky are wrong, but you have this correlation between stocks, commodities, precious metals, and the dollar, where when the dollar rises, everything else falls, and when the dollar falls, everything else rises. So everybody is selling what they perceive to be more risky or more volatile, and they are buying dollars where they perceive more safety. That perception is false. Nonetheless, that's what traders are doing. But I think that this correction in the dollar, this correction in commodities, again, will be short-lived. And what I think the smart money is understanding what the implications are for the U.S. economy, just how bad it is, and that the Fed cannot take away the punch bowl. The Fed cannot stop QE2. The last thing it wants is the market to sober up and realize just how bad the U.S. economy is and just how addicted it is to that quantitative easing. The Fed might pretend that they're going to stop it, but there's no way I think that they will, especially given the fact that there is an election coming up. Of course, there always is, but it's a presidential election, and they are not going to be perceived as destroying the U.S. economy in the face of that pressure.